What does it mean to buy a franchise? The steps involved, players, how to know if you're doing things the right way. We're going to discuss everything. If you're thinking about buying a franchise, thinking about leaving corporate America, should I invest in a franchise? Will it replace my income? Will it help me build legacy and family wealth? Is it the right move for me? Then stay tuned to the GoodSpark channel, get involved in our community. And in this video, we're going to discuss all the foundational items you need to know about franchising. I'm Charles Internicola. I'm here with Nick Powles. And Nick, we're going to dive right into this. So starting off, who are the players involved in franchising? And Nick, I'll lead the way here. I'm going to look for your insights. Guys, if you're buying a franchise, key terms you're going to hear: franchisor, franchisee, franchise lawyer, a franchise broker or consultant, and you're going to learn about the FDD and franchise agreement. So who are these parties? The franchisor, it's the company that sells the franchise, sort of like McDonald's, right? It's the company. They've set up their trademarks, they have their systems, they have their supply chain, and they have their business model, or what we call system. That's the franchisor. And they give an opportunity to what we call franchisees, who are going to sign a franchise agreement, obtain the license to use the trademarks, follow the systems, and hopefully set up what's going to be a successful business. So if you're looking to buy a franchise, you would be a franchisee, and the person that sells you the franchise is a franchisor. As you go on this journey, along the way, you're going to go through some due diligence process. You're going to want to hire a franchise lawyer. He or she's going to help you navigate the obligations you're taking on, agreements you're signing. Another important player that may or may not come into play for you. In the franchise world, you'll hear terminology about franchise brokers or franchise consultants. And who are they? Well, they're people that are out there looking to help you as a franchise buyer, and there's a caveat here, find the right fit for you, find the right franchise opportunity, and connect you with franchisors. When you think about franchise brokers, franchise consultants, I want you to keep in mind a couple of things. Number one, they're an agent. Although they're an independent business owner, they get compensated by franchisors. They're paid by the franchisor. So if you buy a particular franchise, that broker who's working with you and consulting with you, they're paid by the franchisor. So you need to be aware of that part in the relationship. Two other terms I want you to know: FDD and franchise agreement. You're looking to buy a franchise, and franchising is regulated by the government. There's federal regulation and state. And the position of the government is the best way we could protect franchise buyers is to give them pre-sales information, a disclosure of information about the franchise opportunity. That disclosure is called a franchise disclosure document, or it's abbreviated as FDD. And what it's intended to do is it's a document that has to be provided to you before you sign a franchise agreement or pay a fee. And it's designed to give you information about the franchisor, your investment, estimated costs, ongoing obligations, legal obligations. And included in there is the franchise agreement, which creates the relationship between you and the franchisor, gives you legal rights and legal obligations. So those are the players involved. Nick, what are some insights, items you want to share?
There's a few different ways you can buy as a franchisee, and I think what you just established as who are the players. You can go direct to franchisor, meaning I love this business idea, I'm interested. You likely go to their website. At the top it says franchise. You click on franchise, you get into their franchise website, you fill out a form, and you get a call from someone in the franchise development team. That is route number one. Route number two is I don't necessarily know what I want to buy. I know how much money I have. I need some help figuring out what to buy, and you can go through a franchise broker or consultant. The caveat on there, and it's important for you to know this as a buyer, the inventory that they will show you is only the inventory that will pay them a commission. So even if you're a perfect fit for a brand that is brand X, but it's not in their inventory, they will not show it to you. And so you have to be aware of that you're only going to be shown the brands that pay a commission if you go through a franchise consultant. If it were me, I actually go down both routes. I look at brands on my own and I use the consultant. Similar to looking for a house, you're going to go on Zillow or Redfin and you're going to look for a home. At the same time, you're going to have a real estate agent who's going to show you homes too, and you're going to work at it together. Like that is the best practice. Most don't. They go direct in either of those channels. Once you've narrowed down what you like, now you need to align it back to what your life goals are and make sure the investment seems sound. And so the terms that Charles was talking about, FDD, franchise, lawyer, like these are things that will help showcase what the business opportunity is. And it goes all the way back to the beginning of the other term that's important is franchisees. Most brands, at least that have more than one franchisee, have a community of people that are doing it in real time and have made the same decision that you're thinking about doing. That's a huge asset to you for you to be able to leverage them in your buying process. So it's important to know the pathways that you can go to become a franchisee. That's what I would share.
So, Nick, and I think it's good. The analogy between a franchise broker and a real estate broker, I think, is spot on, right? It's so understand that, guys. And next step, we're going to dive into the steps to buying a franchise. And so many of the concepts Nick just introduced, we're going to be discussing in more detail. So, step one was understanding the players involved in franchising, and we've done that. Now, step two is what are the steps to buying a franchise, or what are the steps that you should be following as you evaluate a franchise opportunity? And I'll share these steps with you. Step number one is discovery and research. Step number two is determining what's the right fit for you. Step three is reviewing the FDD, the franchise disclosure document. Step four, we're going to call it validation. Step five is discovery day. Step six, legal review and decision. And we're going to dive into each of these. And although I've given these steps in sort of an orderly way, just understand many of these things could be happening at the same time. But I want to create clarity into process. So, step number one, discovery and research. I'll frame this. I am in corporate America. I'm facing a transition in life. I'm thinking about, I don't want to do this the rest of my life. Is there a business I could buy that will replace my income, will allow me to build some generational wealth for my family, give me more time with my family, help me achieve life goals? That could be one consideration you have. Or there's other considerations, which is, hey, I exited corporate America years ago to raise my children, and I'm looking to get involved in business. I don't need income replacement. I may want to supplement my income. So for you as a buyer, a franchise buyer, when we talk about discovery and research, it's always critical to understand, what goals you're looking for. But on the discovery and research side, let's talk about a couple of elements here, Nick, and I'll give the overview if you could elaborate here. Number one, a point that you discussed: when I'm looking for this franchise opportunity, do I look at it on my own or do I work with a franchise broker or consultant? Two, how do I find out the different types of franchises that exist? Right, I may be passionate about something in a service industry, but maybe retail is a better investment, or vice versa. And how do I identify maybe 3 to 5 brands, right? Franchise opportunities that align with my goals and the capital that I have. Nick Powles, give us some insights here.
So buying a franchise is still complex. Buying a franchise is not a guarantee of success. The last part's important because buying a business comes with risk. And so I've seen plenty of people say, I'm looking for something passive. Passive very rarely exists in franchising. And so that's where, when Charles, you're saying income replacement or career replacement, like whatever you're making from a salary standpoint, that's part of this, but you also have to invest into it. And so you need to figure out, like, how much time is it going to take for me to pay off my investment, my loan? How much money can this pay me on an annual basis? Will I be happy with that? And then how do I scale it if I want to make more money? I talked with a franchisee this morning. She built up a nice little portfolio. She built a 3-unit chain and exited it, and now she's back in corporate America. And I said, "Boy, that's got to be tough." She said, yes and no. She goes, I loved being my own boss. I loved having a business. I built something. I was able to exit it, and I felt very proud of the exit. But she's like, as much as it gave me freedom of me making my own decisions, that is not necessarily stability. She goes, and on the career side, I get stability. I get steady health care. I know when I'm getting my paycheck. I don't have to scramble. She's like, it's an interesting experience to leave being a franchisee, sell it, and now go back into corporate America. And I say that because that's something that you're going to have to mentally get comfortable with, because the beauty of franchising is you get a shortcut into business ownership because the system's already created. You're buying something off the shelf. You're buying a business in a box to some degree, but on the same time, you'll get what you put into it. And so when I see franchisees fail, it's misaligned expectations or even misaligned internal expectations of setting the outcome that they want. So ultimately, like, before you even go down the path of saying, do I want to be in tree service or candle making or burger flipping, I would recommend saying, here's how much capital I have to invest. Do I have enough to scale this business? Yes or no? And what does winning look like? And in some cases, winning might just be, I do want to find something that I only work 20 hours a week in, so I have flexibility to be with my family and do everything else. And I don't care necessarily about the financial kickoff of it. I just wanted to keep something steady, busy, with something that is going to pay off my initial investment in a reasonable amount of time.
So, and Nick, we're going to dive deeper into that. And what we're going to talk about, guys, is the 3X capital rule. We're going to talk about that next. On this initial stage, discovery research, let's create some takeaways here. Number one, maybe you're working with a franchise broker or consultant. Understand they work for the franchisor. There's some amazing franchise brokers and consultants, and then some that may not be as good. So, like any other profession, just scrutinize who you're working with. But also, to Nick's point, that doesn't prohibit you from independently also evaluating franchise opportunities, contacting franchisors and learning about their brand. Two, start surveying the different industries, whether it's service, retail, home based, business to business. There's so many different types of franchise opportunities. Also consider, to Nick's point, not every franchise opportunity is the same. If people say, well, you have a higher chance of success buying a franchise than not, number one, I don't think that stat is true. But number two, you should be saying, so what? Because you could have a really great franchise, whether it's a large system or an emerging new franchisor in a great space that is going to be very successful. And you could also have someone else in the same industry that will not be successful. So, there's so much variation in the quality and success you'll achieve based on the franchisor you choose. And not only the franchisor, the industry they're in, trends in the industry, and the levels of competition. So, not every franchise is created equal. Bigger is not better. Smaller comes with different sets of criteria you're going to need to evaluate. So that's discovery and research. You're starting to enter the franchise world. You understand what a broker is. You may have those conversations. You're exploring different opportunities, different industries, and you understand that just buying a franchise doesn't mean you're going to be successful. And there's so much variation between different franchisors. Step two, Nick, to many of the points you raised, this is determining the right fit. Guys, as you're exploring your franchise opportunity, this is where you really need to take account for what are you looking for? What are your expectations? What is your capital? Are you being realistic? And is everyone being realistic in what they're offering you? So determining the right fit. I'm going to throw out some items that I want us to talk about and focus on. Do your skills and lifestyle match the business model you're investing in? Because you know what? If you know, when franchisees don't succeed or they fail, many times it's not the franchisor, it's the franchisee too. Two is it owner operated or semi-absentee? And is semi-absentee, although the word is used often in the franchise world, does it really exist? Is there really a semi-absentee business? Maybe there is on a scalable level. Nick will go into that. And Nick, I'm going to throw out working capital. And what we're calling from one of our older videos the 3x capital rule, which we'll get into, or you could lay out as you go through this, how a franchisee should look at their investment. I'm investing X dollars relative to what is my income potential and what's a good ROI. So, Nick, determining fit, skills, lifestyle match, owner operator, semi absentee. What should I be looking for as a return on my capital? Go.
So while you're talking, I pulled up Redfin, and I'm going to use this as an example because I think it's an excellent tool to get your mental health right when it comes to buying a franchise. So I click on filter on Redfin. I'm looking at homes, right?
Now,
And so
Redfin is a real estate site.
the
Lists
real
home.
estate site. Yep, for sale, for rent, or sold. Okay. And so now, like if we think through franchising, for rent, for sale, or sold, sold, you're looking at, wow, there's franchisees buying in my market. That's interesting. Easy way to figure out what people are buying in your market. From a PR standpoint, if they obviously do PRs, go onto Google, click news, type in franchisee, and put the location as your market, and see if there's any news about people buying franchises in that market. For sale can be two types. It could be one that's for sale, meaning there's a franchisee that built up their business or ready to exit it in your market, or for sale up starting fresh could be I'm going to start fresh in a marketplace. But if I start there and then I move down, then you look at what is the list price, you look at how many bedrooms there are, you look at all these other filters. Well, the same is true for a franchise, and this will help guide you towards what you're trying to figure out. Do you want it to be in what category do you want it to be in? How much money should it cost? What is the potential return? And I think that's like far too often, and it's not wrong. People get really excited on the passion play of I'm really excited to own this business and I want to own it because of all the buzz factor around that business. Like the one that comes to mind, it grew a tremendous culture. Dry Bar. I remember talking to franchisees. They got rejected. It was like 3 or 4 times. There's a video that I did with them, and they go, we got into Discovery Day. We wore yellow shirts. We were going to tell them why we want to buy this. Now, flash forward, I said, well, how's it going? They go, well, we wish we could have scaled this a little bit more because there was only one unit available in our marketplace. And so that's where, like, it's interesting because you could get really excited about the business, but in that scenario, they didn't cross check all of the things that they were looking for in order to scale properly with that company. And so if it's you, I'm trying to oversimplify it because franchising is challenging. How much money does it cost to get in? How much can I potentially make? How many units are available in that marketplace? Can I actually scale this in my market? And then what Charles said in the end, the rule of three, if it's me, I'm looking for an investment that I have enough to buy it, finance it, enough for capital for a rainy day. You're going to have a rainy day, have capital reserve, and a little bit more capital beyond what you're going to need to operate the business in scalable income so that you can take it and get unit two open or expand your territory. And so that's like it's very difficult to figure out what aligns, which is where the franchise brokers exist. But again, go back to my line at the beginning. Brokers will only show you the inventory they have. There are far more franchises for sale beyond it. And if you have a good broker, they're going to encourage you to find something that matches with you. If you have a bad broker, they're going to convince you why you shouldn't look outside the inventory because they won't get a commission on it. And so just be aware of how that works, and that will help set up your pathway to at least figuring out, get to the starting line of a category that you like. Once you have a category that you like, I would encourage you at a minimum 3 brands. Find 3 brands in that category and try to do some sort of side-by-side comparison of what you like, what you don't. What does the culture look like? How excited are you about the business? Because then at least you have something to measure against when you're going through the process of deciding if it makes sense for you.
And guys, when we're talking about brands, we're talking about franchise brands. And to Nick's point, right? You may be working with franchise brokers, which could be really good. But his point is also like observe on your own, empower yourself, check your local market. Sometimes you may see a bunch of franchises opening. That could be a good sign, or maybe it's oversaturated. But take account for what's going on, the franchises being sold, and what's going on in the community. Um, that's determining fit, right? So you're evaluating your goals, what's out there, you're starting to explore. Next is you're going to have conversations. The step 3 is reviewing the FDD. And how does this come into play? So the FDD, it's a very long document, franchise disclosure document. It's very dense, and ultimately you're going to have a franchise lawyer. You should review it, and we'll talk about that step. But the FDD is going to, number one, you should view it as a foundational document of, this is the minimum information a franchisor is required to give to me. The franchise disclosure document, it has to comply with federal law, may be registered at the state level, but you do need to know the government is not reviewing the FDD. It's not reviewing the accuracy of the information. So you have to take everything with a grain of salt when you're going through the FDD. The FDD is going to have a breakdown, 23 items in it. Each item's a section. Who the franchisor is, management team, prior history. What are the initial fees you pay when you sign a franchise agreement? What are the ongoing fees? What are the legal obligations? Does the franchisor make financial performance representations? And I'm going to, I'll go over a couple of these. Most importantly, what I want to talk about here, because this is a video all about the FDD, but we're going to talk about item 7, item 19, and item 20 of the FDD. Each item's a section. Again, you're now evaluating a franchise. You're maybe spoke with a franchise broker, or you've made contact with a franchisor. They've started to discuss or use the term franchise disclosure document, FDD. At a certain point in the relationship, they're going to disclose to you the FDD, and it'll usually be electronically. It's going to come to you through a DocuSign or some electronic disclosure. They're going to tell you, hey, you're required to sign a receipt in the FDD, that you're not signing a legal agreement. You're just acknowledging you received the FDD. So you're going to receive it. You may feel overwhelmed by it. The franchisor may start to help you frame an understanding of the FDD. A franchise consultant may also do that. Ultimately, you're going to want to work with a franchise lawyer. But at this stage, on the evaluation stage, and what we're going to discuss with Nick, 3 sections in the FDD I want to talk about in this video, and check out our other videos because we're going to provide a deeper dive. Item 7 of the FDD is the section of the FDD where the franchisor says, this is what we estimate to be the startup costs to buy our franchise and open your doors, plus maybe 3 months of reserve capital. So it's how much it's going to cost you to open. Item 19 of the FDD is what we call financial performance representations. In the franchising world, technically, a franchisor cannot tell you or answer questions of how much money can I make? How much money do you make? What are the margins? What are the profitability? Unless that data is specifically disclosed in Section 19, Item 19 of the FDD they give you. And even there, you should review it with an accountant, your franchise lawyer, and understand that information is not audited. It's not verified. You need to scrutinize it. And then item 20 is a list that shows how many franchises they've sold, how many have opened, how many have been sold but not open, how many agreements are terminated or closed. So these 3 metrics, item 7, giving you insights into what your estimated startup expense is, which is important for how much capital do I need? How much reserve capital do I need? Item 19, connecting the dots, would give information of historical data. Hey, these are our company-owned outlets, or these are our corporate outlets, plus our franchise outlets, and maybe they'll give info like, here's the average sales they achieved, here's their cost of goods sold, here's their profitability, or maybe it doesn't give that data. Item 20 is what's going on with the system overall. So in this step here, as we're talking about the FDD, we're talking about economics, estimated startup investment, potential, earnings potential, and be very careful here because sometimes you may only hear about gross sales. And what system activity going, what's the activity going on? Nick, now from the lens of a franchise buyer who's getting this for the first time, not knowing everything, but how should they approach this and understand these economic metrics as they go into the due diligence process?
It's framework. It's not definite. Is what I would take away. Like that was the big note that you just said. Sales projections are conceptual And item 7 gives you a sense of what you have to invest to get to that average sale. But the other ingredients that an FDD won't tell you is your own grit, your own hustle, your own interactions with the community, how you handle your own staff, because a franchisor can't manage your staff for you. And so when you start looking at all these intangibles, understand that that can move it in other directions, which in today's world, like the easiest asset that you can use to help you understand what this is saying is probably Chat GPT, uploading some sections, asking Chat GPT about the size of the industry and the market that you're in, like what could the potential of this business actually be. Like there's tools that now exist in a world of AI that is going to only continue to make this better from a data standpoint. But data is just one tool. Like if you're buying a car, there's there's a cost that is reported on the car, and then there's the negotiation that happens. And most of the time, those two things are vastly different. And the same is true in business. Like that's where like it's a framework. I think the FDD does a great job of building a framework so that you can make an educated decision to buy it. But the mistake that franchisees make after they become a franchisee is they use the FDD as the blame point versus looking at the mirror and saying, what could I have done differently to impact my business in a positive way? So use it as a framework, not as a Bible or the absolutes. And there's plenty of great information within there that will help you make your decision.
Well, so now step 4 that we're going to talk about is validation. And guys, when we're using the word validation, we mean let's do some more due diligence to validate your assumptions and beliefs about the franchise opportunity and why you may want to buy it or not. And I want to connect to the prior items we talked about, which is reviewing the FDD. So again, as we're validating, what we want to do is the assumptions we're making based on our review of the FDD, conversations with a consultant or broker, our insights from ChatGPT or overall assessment. What are some of the steps we're going to take to validate? And the short answer is going to be talk to other franchisees. But I want to give some context here. We discussed earlier about the FDD. Item 7 says, what is the estimated investment? Well, keep in mind it's an estimate. Different markets vary. Maybe you have a bigger location. Or what I want you to keep in mind too, that's the estimate to open up the business. What about your compensation and salary? And how long does it take you to get to profitability? Right? You're not going to know these things. And then you're going to look to the item 19 on the financial. Does the franchisor give you how long it takes to become profitable? I doubt it. It would be very rare to see that. Maybe they're going to give you information about gross sales, maybe profitability, but still not going to answer how long it takes you to get profitable. And then item 20 is system health, opening, closing, or people terminating. So now when we get to validation stage, the critical task is to, on your own, reach out to existing franchisees. Every FDD is required in an exhibit to the FDD to include a list of existing franchisees and their contact info and franchisees that left the system and their contact info. So it would be so helpful if you reach out to them and say, hey, I'm in a completely different market. I'm thinking about investing. Do you have a minute to share your experience? And if you can get those conversations, what are some of the things you want to validate? Was the estimated startup cost what you expected and what they say is true in the FDD? How long did it take you to get to profitability? In the item 19, is that information valid? Like, where do you fall on sales and what's been factors for you? Or I see a number of locations closed. Any insights there? And most important, and I'm taking this from conversation I had with Nick over the years, Nick would, one of the questions Nick would recommend is, would you make this investment all over again? Nick, what are your thoughts on validation?
Validation is the most critical element, often underutilized by a franchise buyer because the franchisee is able to disclose things that the franchisor can't. I will say, and I've used this example before, I got close to buying a franchise where I was going to invest along someone who's going to operate it. And the most important question that I asked during due diligence is, would you do it again? And I'm watching them. I'm watching what the reaction. Now, today's world, I'm able to have a video chat with a franchisee versus the phone, which gives an advantage. I'm watching the body language, and then I'm listening to the tone. And each of the ones that I validated with had hesitation. Now, in that process, I asked the franchisor to give me 3 franchisees. I said one that's a bottom performer that you like, a middle performer that's hitting average, and a high performer that is outperforming everybody else, so that I could have at least a sense of consistency in what I was trying to dial in. And it gave me the answer that in that particular brand, the answer was no. I was not going to buy it after listening to the franchisees, because the next question was, did they set your expectations correctly? And it was a hard no. And so
Yeah.
that's where, like, but I wouldn't have got that out of a sales process unless I would have done the due diligence and leveraged franchisees to help me do it. Validation.
Nick, when you're considering yourself as potentially investing in a franchise, and again, it's going to vary depending on goals. What's in your mind a good rule of thumb? If my investment is X and item 19 is sort of indicating, but I don't know, that I could generate annual gross sales of a certain amount, what are you looking for in terms of sales, profitability, how long it takes you to recoup your initial investment? What does it look like in the industry? Let's talk like, so what should a franchise buyer in the buying a restaurant look for, and how long does it take to recoup their investment? Retail business, those talk, give some insights there.
Yeah. So and it goes back to the beginning of this, of looking in the mirror and saying, what kind of buyer do you want to be? For me, I would be a scaling buyer that is less emotional about the brand and more so focused on, how do I get a new unit open each of the first 3 years, with an idea that the initial payoff on the initial investment is taken care of in somewhere between 3 and 4 years, so that now when I get to year 5, I've built up a really strong portfolio that's kicking off positive cash that I was able to leverage. Like, that's how I would look at it. There are some people that said, let me just get in with one, I'm happy kicking off cash. So I'm glad you said that. While you were talking, Charles, I went back to our good friends ChatGPT. I'm going to leave the brand out. I'll tell you offline what the brand is. But I said, how long should it take me to break even if I were to buy this franchise? I'm going to give you the numbers, because this is what's fascinating, and it's not far off, because I know the brand intimately. It says, this is a rough ballpark, ChatGPT, making sure the disclaimer so you don't sue them. Estimated initial investment ranges roughly 1.3 million to 2 million. Some sources indicate up to 2.7, depending on location, build out, and equipment for a new unit. Reported average annual gross sales, AUV, for franchise units is about $2.1 million in 12 months, ending in March 31st, 2025. The lowest third had AUVs around 1.4 million. Then it goes through what the royalties and everything else. So it said, working out a rough break-even estimate, we made a simplified model. You invest the lower bound, 1.3 million, you achieve the AUV of $2.1 million, you hit, you're an average franchise performer. You have reasonable profit margin after rent, labor, cost of food, utilities, royalties, marketing. We ignore tax, depreciation, financing costs for simplicity. So now it says, if you gross 2.1 million times a 10% margin, that's 217,000. Initial investment of 1.3 divided by 217,000 equals about 6.3 years to break even. And so then it gives examples of, if you're underperforming or overperforming, how long this investment can take. And what's fascinating is pretty spot on. And so I'm using that as a rule of thumb. So would I be comfortable with 6.3 year payback on my initial investment? I would not. Like, that wouldn't align to what I would want. But some people in this restaurant business particularly might say, I want to build this for my family. I'm okay waiting a while for this to turn. I don't need the money initially. And I like the idea of being a hero in my community that says I own this restaurant. And so that's where, like, that looking in the mirror thing is so important to figure out, like, how do you even align to the right business model.
I think the takeaway here, guys, is it's not the specifics, but it's the methodology the goal here is to help recast how you're thinking about franchise investments. And of course, factored into that, which we don't know, would be, hey, is that the ROI? And am I earning a salary along the way that the business is paying me? So these are things you should be thinking about. So you're now involved. Step four was validation. So you're trying to validate your assumptions, beliefs, and what you're looking for. Franchisor is like, that is great. We think we're aligned. Our team is very much aligned. You're aligned. We all feel good about it. I got good news. We'd like to invite you to our discovery day. Nick, if you could, from a definitional sense, what is a discovery day? How do franchisors view it? If I'm a franchise buyer, what am I going to experience? And what should I be looking for at the discovery day for my continued validation efforts?
It varies by franchisors. Some are long, some are short. Some have dinner the night before, some don't. For the,
What is it, Nick? Just definite, like, what is discovery day first?
it's a process of them doing a deeper dive of what the business is and why you should buy it.
And it's a meeting. The discovery day is, hey,
Meaning,
franchisee candidate, we're going to have a meeting at our offices or at a dinner. There'll be other candidates there. We're going to have a presentation. We're going to meet up, and it's really to close the deal or close the relationship.
it's not like in the first example, it's not much different than going and seeing a house. That's your discovery day. You go do a tour of the house to get comfortable with, do I like this? Do I like the neighborhood? You go to the restaurants. Or like a job interview, especially at more of like an executive level, you might fly in, you might do a dinner beforehand, you might go have a meeting to understand the business construct, and they're interviewing you and you're interviewing them at the same time when you've been recruited in for an executive position. It's basically the same thing as that.
The Nick, what's the so let's what's the objective or thought process of the franchisor at discovery day? And on the other side, what should the franchise buyer, whoever's watching, what should they be looking for as red flags, green flags? Again, how should they be approaching it?
It's interesting. So I'll actually disclose the brand because they're part of Frank Camp, part of our infrastructure, our community. Lane's Chicken, they as a franchisor will literally use it as a chance to say no. And they're almost looking at it as, convince me why you should get into my system, because their statement, and we've used it before, is protect the franchisee, protect the brand. And so they're looking at it, you convince me why you're here. And so they've almost flipped the script. Like, we'll tell you how the business contract works. We know how we support it. Our confidence is so high. You convince us why you should get in. That's the really, really, really good franchisors. The other ones, as much as they say, we might say no to you, I would say it is the majority. The majority of them are there to try to convince you, make you feel comfortable, answer any of your last issues to make you say, I'm ready to move forward. That's the bulk of how they're used. For you as the franchisee, what are the red flags? Charles and I did a podcast during COVID with a franchisee who bought Footprints Floors. I'll never forget this one. He's a restaurant general manager. He goes, I always wanted to own a restaurant, but I went to a restaurant franchise brands discovery day and was so turned off by the culture that I felt like I was just going to be another number. They really didn't care about me. They were trying to sell me a franchise, that it took someone that always wanted to own a restaurant, was capable of owning a restaurant, put them into the flooring business. And so, like, you're looking for culture fit more than anything. But again, like, it's what my line was, like a job interview. You're looking for fit. Do you see yourself working there? Do you see yourself working with those people? These people are going to be the ones where, when you're paying a 5% or a 7% or 10% royalty, this is what you're paying it for those people to support your business.
And I think that's a great insight. You're looking for culturally aligned franchisor team members who view their obligation to you as a franchisee. And again, using the team at Lane's Chicken, when they were discussing how they approach or think about their franchisees, they say those are our customers. and they're paying us a royalty, are we giving value for what they're paying us, right? I think that's the mindset to look for. So discovery day goes well. You want to sign franchise agreements. This should be happening not as the last step, but along the way. Legal review, signing franchise agreements, final decision. Guys, if before you sign a franchise agreement, it's a legal agreement. It's the underpinnings for the future asset you want to build. So don't skip the step of working with a good franchise lawyer, and make it a franchise lawyer, not someone who specializes in the industry. Franchise brokers, just like in real estate, will recommend certain franchise lawyers. You could consider them, but also do your own research, maybe hire someone independently, right? Look at the credentials. There's some amazing franchise lawyers out there.
My
Also,
my my uncle's an attorney.
yeah, no, don't do that. You need someone who's experienced in the franchise industry. I mean, the insights you'll get from them, and that's a must. But as you go through this, right, understand the attorney's review of the FDD. It's only as good as the data that's in it. The attorney's not verifying the data. And so that's why you go through that validation process. But on your franchise agreement, and it goes beyond the scope of this video, what are you thinking about? Well, am I setting up a corporate entity? Do I sign in my individual names? What does the personal guarantees mean for me, my wife, and my partners? Um, I was expecting a territory of a certain size. Are my territory rights secure? Can they be taken away from me? If I want to sell or transfer, what are my obligations? If I close the business, how do I limit my liability? Those are some of the many things you'll discuss with your franchise lawyer, um, and just take that process serious. Once you go through the legal review process, what will happen typically is that many times you may have certain modifications to the franchise agreement, and your attorney may propose them. If they're accepted, there'll be an addendum attached to your franchise agreement. If everyone's in agreement, it'll all be ready to sign. And then that's your decision to sign the franchise agreement. Nick, what do you have on legal review and decision there?
I it, I don't think there's a ton that you can negotiate in buying a franchise unless, and the only time that I've seen it is if you've proven yourself as a franchisee in the past and you have a big portfolio and maybe there's some things you can negotiate. But don't go into think of this as a negotiation. It's not like buying a car. It's not even like buying a house at that point. It is what it is. And so there might be some points that you could get clarity on, but it's not really a negotiation. And I think that's the only time that I've seen things get derailed is when you think you could, well, I want to pay a smaller royalty, or I want to get this, or give me incentivize on why, because it's got to be a consistent offering. And so understand, like it's pretty, like in most cases, it's especially if Charles has created the FTD, like it's a pretty good structure. And so when you get to the franchise agreement, there's not a ton of wiggle room for negotiation, and so I would definitely set that expectation going into it.
Well, and what I would say is a red flag. Look, you think about your negotiations or anything you want to change as preserving what you were promised. So if you were
Yeah,
promised something about territory or certain things, you want to make sure that exists, not just on someone saying something. Also consider if a franchisor is willing to negotiate and make special deals for you, that may be a lack of integrity because now they're treating their other franchisees differently. That could be a red flag. Guys, this is all about what it means to buy a franchise and some of the steps to buying a franchise. And just consider, right? We discussed who the players are and the steps: discovery and research, determining fit, reviewing the FDD, validation, discovery day, legal review, and decision. And if you haven't gone, go to the GoodSpark website, get involved in our community. We are gearing up some amazing resources for franchise buyers, workshops, broker meetups, franchisor meetups. You always have to do your due diligence, get involved in the community, and we are planning in the future a franchisee event, education and insights into the franchise world.